Hey traders, for today's trade, we're looking at an option strategy known as a cash secured put in Etsy stock. This is a great strategy to use if you're looking to buy the stock at some price below the current price. Here's how you can get paid a premium to take that risk. So looking at Etsy on MarketSmith, shares did quite well in the second half of 2022 after falling over 83% in the first half of the year. A strong comeback thanks to better earnings pushed the stock higher, and it was able to recoup much of its losses. Shares have now formed a cut base with a 142.63 entry, and the stock is trading just 5% below that buy point. Etsy is also above support at its 10-week and 40-week moving averages, and shares are part of the Internet Retail Industry Group, which ranks number 45 out of IBD's 197 groups, which is pretty good. So today our aim with Etsy is to figure out how to potentially buy the stock for less than the current price with an option strategy called a cash secured put. This is a slightly less bullish trade than buying the stock outright, and it involves writing an at the money or out of the money put option and simultaneously setting aside enough cash to buy the stock. The goal here is either to have the put expire worthless and to keep the premium, or to be assigned and acquire the stock below the current price. Selling put options is an easy place for investors to start with options. They're similar to a covered call and are pretty easy to understand once you know the basics. So let's take a look at my trading platform and set up this trade using Etsy. So with Etsy here trading around $135 a share, we could consider this cash secured put trade. We'll want to be using the March 17th expiration here, and we want to be looking at the 130 strike price. And with this simple trade, we are just looking to sell one March 17th expiring 130 put. With Etsy trading around 136 a share, investors can consider selling a March put with a strike price of 130 for around $10.30. An investor selling this put would receive $1,030 into their account, which would be theirs to keep. If the stock falls below 130 by March 17th, you would be required to buy 100 shares at 130. So now the effective net cost of the position would be $119.70, thanks to the option premium received. That's roughly 11% below Friday's closing price. If the stock stays above 130 at expiration, the put expires worthless, leaving the trader with an 8.6% return on capital at risk. That works out to be roughly 52.3% annualized. The main risk with the trade is similar to outright stock ownership. If the stock falls quickly, the trade will suffer a loss. However, the premium received will help offset that loss. The maximum loss on the trade would occur if Etsy fell to $0 a share, which would see the trade lose $11,970, but most traders would cut their losses long before then. And there you have it. As always, remember that options are complex and investors can lose 100% or more of their investment. Be sure to join us for our regular options content where we discuss new trade ideas like this every day.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.